There we go, everybody. Hope you guys are all having a pretty good day so far. It's a nice Saturday outside, at least out here in Washington State. We're cold, but like in a good way. Cold in a good way. All right, let me move some stuff around here. Then we're going to talk about Bitcoin for a little bit. This will probably be a shorter stream, probably around an hour time. My neighborhood's having a large block party, so I'm going to be going back out there to say hi to them every now and again, or in a little bit here. And Loki wants to play with his friend Chomp, who's like a baby husky, basically. So hope you guys all had a good day. Let me go over here to Bitcoin very fast. There we go. So we can kind of talk about what's going on here, because there are some important things going to be happening over the next few days going on into this week. Oh, sorry, Loki came over here to say hi. But basically, there's a few things you guys have to understand. And Loki's going to say hi, so here you guys go. There you go. He really wants to go outside and play with the dog, so he'll be bothering me for quite a bit of time here for a little bit. All right, but like I said, this will be about an hour stream. And hey, Lalo, happy to see you. Happy to see you back, man. And yeah, and I can I saw your comment about a tutorial. I'll try to work on a tutorial for Gartley patterns, but I'm gonna have to do some research on those. I don't know how to give a tutorial on them just yet. I mean, I hardly ever use them, so it's something I read about in a book, but I've never had to use in trading. But I'll try to figure out more about it and make a tutorial for you. It's in one of my books that I have, and I've actually have a sticky note on the chapter. It's just not something I've really ever used because I've never actually had to, at least for my style of trading here. But yeah, I can get into it with the tutorial for you sometime over the next couple weeks or so. All right, everybody. There's two things you really got to get ready for this week. The first one being, if we go over here to Bitcoin's weekly chart, we should have a death cross this week, guys. We're not entirely sure how Bitcoin is going to react to this. And hey, Jose, hope you're doing well. But what do you call, the one thing you guys are really going to be looking for here over the next few days is what if Bitcoin does have a death cross this week, or if it's going to happen actually a week from now going into next week. So if you guys can see, we're on the verge of having a death cross here. There's probably a good chance we cross actually below it sometime, tomorrow when the weekly candle closes. There's probably a good chance, but if by some small chance we don't cross down below it, that gives us a little bit of breathing room going on into this week. The moment we have this death cross here, it's probably not going to be a good sign for assets. And then, of course, the other thing coming out here next week is going to be Jerome Powell. Make sure you guys vote on the poll if you guys want to here. I'm basically asking how many of you, how much you think rates will go up from Jerome Powell. Do you think he's going to raise it by 100 basis points, 75 basis points, 50 basis points, and 25? It looks like 75 is winning right now, and I would say, listening to any media outlets right at this point in time, they're also factoring in about 0.75, 50, or 1. I've even heard some say they're going to go as low as 25. So the 25 guy people over there, they have some legs to stand on as well here. Okay. But as far as today's concerned, everybody, I'd be adding on this basic trend line just to your charts. There still is an opportunity for Bitcoin to break out. I know it doesn't seem as likely, but there still is an opportunity here. We're going to be hoping that the NASDAQ can find a level of support here sometime. I want to say, by Friday, Saturday, we want to see if the NASDAQ and a lot of these other indexes can actually find their levels of support. What I'm talking about as far as the NASDAQ is concerned, if I stretch this out just a little bit, you can see we have a little bit of a head and shoulders here on the NASDAQ. So we should actually be coming down a little bit more, unfortunately. So we have our shoulder, head, and shoulder right here. And then we've officially broken down below it. I could actually probably just put another line right here, so you guys can see what I'm talking about. So we have officially broken down below that head and shoulders, which is a pretty bearish indicator, as you guys know. And we also did just have a death cross here a few days ago. One of the other things I think you guys should be aware of, if you guys didn't see it earlier, we actually had a smaller death cross, smaller head and shoulders play right here, where we had a shoulder, head, and shoulder, but the shoulder was a little bit wonky, so we didn't really talk about it too much at the time. At least this time we had a shoulder, and we had a massive head right here. So if this head and shoulders plays out, everybody, I would say there's a good chance we're going to come back down to, let's say, at least 11,317. If we really want to go down even more than that, of course, we're going to be going back down to the June lows and then we're going to have to see if we're going to be breaking down below that, heading to some new yearly lows, or if we're going to be able to find our footing somehow. It doesn't feel like the market really wants to go down much further than this at this point in time. We're going to have to see some worse economic data coming out besides all the bad FedEx news that we've been watching over the past few days. But at this point in time, everything is pretty darn bearish. And my concern here, as you guys know, is if we come back into contact with the $11,000 range, which is pretty much the support over here, that means the NASDAQ has to come down about 7% or so. If you guys think that Bitcoin follows the S&P more than it does, the NASDAQ, even still, that means the S&P will have to come down about another 6%, excuse me, which means here, guys, that usually when the NASDAQ falls or Bitcoin falls or any of these indexes fall, Bitcoin falls more, percentage wise. And what we're looking at right now is Bitcoin has support right down here around 17,563. That was the lows we experienced a couple months ago now. We're about 12% away. So I would actually assume if we do come to retest those lows over the next few days here, probably going on to the end of this week as we kind of feel the interest rate hike on the stock market, there's a good chance that Bitcoin may come back down here to retest some lows around 17,000 or so. At this point, just wait to see if we have a breakdown. I'm not trading too much here. I really want to see if there's some type of golden opportunity, for Bitcoin to break out here. And I'd be really excited about that. On the other hand, the last Bitcoin breakdown that we had, it really wasn't all too good here, mostly because the stock market found support where Bitcoin didn't. So you saw that Bitcoin actually broke down right here. And what happened? And ultimately, if you follow the long-term strategy of, a swing trade, yeah, it did make you some money. It did end up coming back down. But you saw that it just kind of, for like another week or so, it just kind of bounced back and held before ultimately making that big dump move. I don't want to see this happen again. I want to see it more of a traditional drop where we break down below a specific pattern. This isn't the UDST chart. This is a UDS, or the dollar chart, which makes it a little bit different. But basically, you want to see a breakdown and it continue to go down. It doesn't have to come down that much, but the fact that we kind of got choppy here lets me know that we are at a very strong support level, and it's not just going to be the dump, after dump that we experienced in the first half of the year. We might not have a big dump like that for a while. We might actually have more of a grinding move down here for the foreseeable future, unless something really surprising happens through the Federal Reserve rate hikes. Like, 75, I think, is baked in at this point, but something more like 100 basis points, that would get the market dropping in a hurry. And it would really send a signal to the market saying, hey, we are really serious. We talk the talk. Now officially, we're going to be walking the walk. Which could be interesting, but I think they could still say they're walking the walk with 75 basis point rate hike. But even then, that's still going to be hard for them to gain some of that credibility back here for you guys, or for everybody, right? Okay. So one other thing here, let's go over to Ethereum. Ethereum did break down below this level of support a few days ago here. We did manage to bounce back up, but guys, we don't really have to worry about this right now. I would say the one line you guys have to pay attention to is this longer term trend line that started all the way back over here with the lows of June, June 18th or so. We've managed to hold it so far, but we are on the verge of breaking down. And usually when we break down like this, I am a little bit more concerned about how far we're going to go. We don't really have too many good support levels after this. I would say maybe we have like two. The first one going to be for Ethereum, somewhere around 1,356. And then we're going to also have another one here, which this is more of a, let me see what happens. But we have this downward trend right here, which can eventually lead to a breakout. But that breakout might be somewhere in October or November if we keep on going along this trend. Hopefully we don't break down below this line, because that's where we start going back down to, new yearly lows of like at least to like $1,100 to maybe $1,000 if we're unlucky. If you guys would remember, Ethereum actually dropped down to below $900 on the last big crash that we experienced in June. But so far, I'm hoping that we can stay in this trend line here. This pattern. I don't know if we are, because as soon as we start breaking down, these support levels are going to be crucial for us to hold. I think it'd be okay to try to buy off of these support levels there just to see what would happen. All right, but okay, everybody, let's go back over here. Let's go to the other Bitcoin chart. We don't need any fancy charts for today. It's going to be very simple technicals. Let's go back over here. There we go. Okay. Hope you guys all doing okay. What's going on right now? And hey, Lala, what death cross? 20 MA 50. So the death crosses, you'll hear me talk about these quite a bit. I've been talking about these death crosses for months. But the death cross you have to be worrying about, the big one you should be worried about, it's on the weekly chart, right? And so what a death cross is basically is when a smaller moving average crosses below a large moving average. So a 20 moving average coming below a 50 coming below a 200, a 200 coming down below a 300, etc. Right? And what we're seeing so far is there's a good opportunity probably tomorrow that the 20-week moving average is going to cross below the 200 weekly moving average right here. And again, if we kind of go back in time a little bit, that's just never happened. During the COVID drop, didn't even come close because it was so fast. During the 2018, 2017 drop, never even came close. Never came close. Now, well, actually did come close, but not too close. Over here in 2015, came close, but it never actually happened. So we're kind of in uncharted territories here, which is going to make this very interesting. We do have another thing happening right now. You see this blue line right here? That's the 50-week moving average. It is crossing below the 100 weekly moving average, which is this pink line here. Happens every now and again, happens every now and, oh, actually it didn't happen over here at all. But basically it just happened there last week. I don't put much stock into it, but if you were to take one thing out of this right now for the long haul here for your long-term trading career, always pay attention to the 20-week moving average crossing below the 50. That's something we have a lot of history with, and this is usually a really bad sign, which is why we talked about it, or I ranted about it pretty much all through the first part of the year. But since we don't know, we've never had this happen before, we don't exactly know what the result is going to be. We just know that traditionally a death cross is a death cross because it's not, it's not a golden cross. It's not something good you want to be seeing on the charts. So, that's a bad sign. And then right here, I would honestly say like 2023, maybe end of Q1, middle of Q2, perhaps. We may have another death cross coming up here pretty soon as we see the 50-week moving average coming below the 200 here, but that's going to take time. So that'll take months before that happens. And if we go off of these last few charts, our last 50 candles, make a move right here. There you go. These are the last 50 bars all the way over here. Basically, every time we get a new candle, this 50-week moving average is updated. We lose this, the average, we use this candle, we lose this candle that has an average of about 47,000. We lose that average. And now the new candle that's being plugged in here has an average of like $20,000 or $19,000, not a good one. So you actually are over time, it's going to actually stagnate here pretty soon. But I would say over the next few months, you actually are going to see this start to increase a lot faster. Only reason it's not going to increase faster in the short term is because we're going to be replacing, instead of dealing with one that's like 47,000, now we're going to have one up here at 54,000 to sort of slow it down just a little bit to moderate that kind of drop down effect. It's still going to be increasing, but not increasing as bad. I would say that you really will start to see it start increase on the downward side here, guys. Closer to October, you're going to start to see it start to dip down a lot more aggressively. But until October happens, I think we're okay. And even then, guys, even if October is bad from like that perspective, we still have many weeks before we actually have to come crashing down here to the 20-week moving average. It would still be sometime in the year 2023 or something like that. Again, Q1, Q2 type of time frame there for most of you guys. One other thing here, guys, it already happened on the exponential moving averages chart. Let me go to tutorials for channel for you guys very fast. I think these are the simple. Yeah, these are the EMAs. These are not simples. But for the EMA, we just officially had a breakdown right here where the 20-week exponential moving average crossed down below the 50. And we don't know what's going to happen with this one either. But again, it's never happened before. We came close over here in 2019. We came really close over here in 2015. It's never happened before, though. So we're kind of in this unknown territory that you guys still have to be aware of. And you know, we're keeping a closer eye on it at this point in time, but it still is important that you guys keep an eye on it, just because it's like a really bad signal that we've never had before. When you're in uncharted territories like this, you know Bitcoin's in a little bit of a pickle, right? All right, let's go back over here very fast. Let's go to the 15-minute chart. Squeeze this out a little bit. There you go. Not much action going on it currently. Everything's just down a little bit here. And just so you guys know the reason for that, if I go back over to the simple moving chart, Bitcoin is basically having some trouble. Is this the EMA or a simple MA? Yeah, okay. Something's up with this. Oh, this is all set to weekly charts. Okay, let me go chart. We're just having some issues with our 20-day moving average here. So the 20-day moving average is what's stopping Bitcoin at this point in time. We still have an opportunity to pop up higher, but it is going to have to be a big pump up here. And that pump would probably have to take us to at least 21,000, like a 1,000-point day, if you want to see us getting above the 20-day moving average here, which would be a very nice thing to see, right? And hey, Far From Broke, happy to see you. And hey, Alex, happy to see you guys is back. And hey, Prince, yeah, I can do some technical analysis for you guys in a little bit here. And hey, Thest, railroad workers still have to vote on the deal, may not be accepted. We're going to be watching that very closely. The thing about it is, so basically how I could sum up what happened with the railroad deal, it seemed like the administration and Congress, in a way, managed to hamstring the union bosses and kind of force them into accepting their demands, basically. And what this means is they got a really lousy deal. They didn't get the deal they wanted to. And therefore, the union members are pretty upset, understandably. However, even though they're really upset about it, and they will probably most likely vote no on it, we don't know. Maybe they like the deal. Maybe the union can package it up and make it sound really, really nice. You just never know. But from what I understand, they get one sick day off. So I don't know if one sick day off is really going to motivate you to go to work, right? But even if they vote no, and they say we want to strike, there's another cooling off period again, which means the strike is going to be kicked down the road at least a month here, which is going to give us some time to, you know, enjoy maybe a little bit of the market doing its own thing without having to worry about a huge supply chain crisis, inflation spiking up all over again. That's pushed down until October 15th, 16th. Okay. No, even longer than that, because it's a 30 days or 60 days from the time of the vote, and the vote hasn't even happened yet. So no matter what happens there, the administration was able to kick the can down the road. Now, that means it will most likely happen in either end of October or maybe early November during election season. That'll be a crazy move all in itself, and we'll have to see how that kind of impacts everything going forward here. And hey, LeGrasse, I'm doing well. Thanks for asking, my man. Let's see. And hey, damn crypto, I think I did get your message. I haven't responded to it yet, but I think I did actually get your message here. I actually don't use that messaging system all too much, but I'll say hi to you after the stream or tomorrow when I'm working. After the stream, guys, my whole block is literally having a massive block party. So I'm gonna be going out there in a little bit to say hi to everybody. And Loki's favorite pal out there, one of our neighbors, Baby Huskies, is out there, so he really wants to play. Let's see. Did I see that Hex did an 8x on POW today? Are you getting any POW coins? Nope. Haven't bought any yet. I don't even know what exchanges POW coins are on. It might be fun for some of you guys to day trade if you want to, but I just haven't had the time today. I've been busy walking Loki. I've been just busy doing a lot of work and cleaning up around the house. It's the weekend here, guys. It's the cleaning day. It's the cleaning day. Let's see. And yeah, the large cap stocks that had the 20-week cross below the 200. Oh yeah, dude. There's plenty of them. There's plenty of stocks that have had the 20 weeks cross down below the 200 weeks. You're talking about weeklies, right? Yeah. A good way to do that and just check is here. Go to Finviz. It's part of the scanner. You can actually set it up to look for those specific things. So all we want to do is look for a 20-day simple moving average that crossed down below the 200. So one that's below the 200. Currently 6,414 stocks that have done that. So we can go to any one of these and just go to TA. What is this? Alaskan Airlines? No, Alcoa Corporation, excuse me. Alcoa was at $90. Now it's at 42, obviously. AAAU was at 20 bucks. Now it's at 16. Happened there. Don't know what that one is. It's a very small penny stock. I should probably put like a price above $10. There we go. AADI, it was at $24. Now it's lost 50% of its revenue, or 50% of its value, down to $12.50. You got AADR that used to be up at 64. Now it's at 47. Also broke down a couple days ago. American Airlines was at $21. Now it's at $13. AAN was at $25. Now it's at $12. You know, the markets, guys, has had a really rough time. And there's a good chance it goes a lot lower, which is why everybody's freaking out so much about this. American Assets Trust was at like 40 bucks. Now it's at 27. There's a lot of stuff that's done bad here, my man. There's a lot of stuff that's just had a really rough time. Whatever this Switzerland company, ABB, it was at 38 bucks. Now it's at 27. ABBV, I like this thing a lot, actually, for a longer term hold. It was at $175. It got as low as 135. So lost a lot of value. Now it's up, actually popped up back up here to 145. But yeah, there's a lot of long-term stocks out there that have had those big moves. And I'm waiting to see how everything kind of works out. A simple one that you may look at here is, I would always recommend that one of the stocks that you guys trade is going to be Apple. Apple is something that's very easy to trade, and it's not too difficult, and you don't have to freak out every time you trade it. You know, you're not looking at crazy levels of volatility. You're usually not surprised with what Apple has to do, right? Just a few days ago, or I guess a couple weeks ago, I gave you guys the Apple put because we hit up here, and I was like, okay, we're about to come back down. This rally can't last forever because this was an amazing rally. Like literally, Apple ran up about 37% in 43 days. Absolutely amazing. We were due for a drawback. You had the trend line. We pulled back here. But what I wanted to show you guys, if I take off this line here, go over to the weekly chart, this hasn't even come close to. That's why you see a lot of the NASDAQ and the tech stocks falling so much. They have so much more to fall down here, which is why the NASDAQ fell down like 5.5%, while the Dow only dropped like 4%, or while the S&P only dropped like 3.5%. The NASDAQ has a lot further to fall, which is why I'm not really betting too much on tech over the next few weeks. And as you guys can actually see, we closed down below the 20-week moving average here after having this death cross between the 20 and the 50. We're still coming down quite a bit. And, you know, that 200 daily moving average is all the way down here at 106. By the time we hit it, it might be somewhere in December or maybe October, November, December. And that may be up when Apple's around 120 bucks or so. Hopefully we don't break down below it. But, you know, even during, well, let me see what happened during the financial crisis. We actually did break down below it slightly. And during the dot-com bubble, we did absolutely drop below it for a while as well here. So usually buying it underneath this zone, if we have the opportunity, is usually a good opportunity for the long term here from a technical aspect. So if you're looking for long-term holds, if you can buy it close to this line or above it, you know, it tends to do very well on the uptick. You could go to a lot of other stocks though as well. You can see Microsoft is a lot closer. Netflix is already well below it. Buy, right? But you got to worry about Netflix though, because it's more of a growth game here as we have our recession, as people can't afford Netflix and they want to just, you know, they can't afford every streaming service under the sun. You will see a lot of these things go down quite a bit. Tesla still way above it, can definitely come down over the next few weeks. AMD very, very close right here historically, right? It's used to being below it. I should say that it's COVID really launched it off here. Nvidia, this thing is probably going to open up Monday like at $95, some crazy drop. Evgo dropped them as a client here, and that's just the biggest news in all of tech world this weekend, or this week, I guess you would say, because the news came out a few days ago. But you see, it's been down here before, and it always comes back up. But Nvidia is going to be pummeled. I'm so mad I didn't have longer term shorts on that sucker. Nvidia has just been having tons and tons of bad news going forward here. And hey, Tony, any short open on the SPY, Triple Q, or DII right now? I have no shorts open right now. No, I don't really trade shorts too much in the market, more puts as far as the stock market's concerned. But no, I have no puts open right now. I forgot to open up a put on Friday. It was just going to be a base SPY put. And I just wanted to play out that head and shoulders play that we have on the NASDAQ. I want to see how much further everything comes back down, but I think I'll be fine with it for now. I still have that good amount of money from the last options call I gave you guys. But yeah, we're looking pretty bearish over the next few weeks. It may just not be as clean of a drop as I want it to be. I'm hoping that for you guys that have some puts out there, the interest rate hike will actually drop the market down really fast, and that'll give you guys an opportunity to scale out a large chunk of your options, and then from there you can just kind of hold the rest of them on there for the next couple of weeks to see how bad the market gets, if we do retest those lows, or if we do manage to find some support and start bouncing, in which case you can scale out the rest of your puts or shorts then. And hey, Square Bagels, happy to see you back, my man. And hey, Alex, I'm in the Carpenters Union. You get 6 days off. You just call in sick with no pay. Yeah, see, that sounds really, really bad. I mean, like, I don't even know how to do that. Probably, I guess I don't get sick too much, but it just seems rough to get like no pay on a day off like that. I'm used to just like calling off sick, and I have like, I don't know, I had like 15 sick days, I think it was, when I worked corporate. And it was nice. I mean, I never really took them, honestly, but I hardly ever got sick. But, you know, I'd like to have them, I guess you would say, right? Maybe one day I just went to get vacation. I'll just lie and say something like that. But, you know, I never did. So I didn't game the system as well as I should have. Let's see. And hey, Jaro Samples, isn't it pretty rare for members to vote down a deal? I think, for the most part it is. But the way I'm looking at it, the union bosses usually get their people a decent deal here. One of the issues with the railroad industry right now is back in 2005, 2008, during that whole era, they were really strapped for workers and they really wanted to expand. So the only people that were willing to actually take those hard jobs, right? They weren't people my age in their low 20s. We don't want those jobs. We're kind of like the more entitled generation, if you will. They went for a whole bunch of people that were in their 30s and 40s, and mostly in their 40s, okay? So move around like, 30s and 40s, move around like another 10, 15 years. A lot of those people are getting close to retirement, and still nobody wants to do those railroad jobs. So the problem with all of this here is, since the unions didn't get a good deal for their employees, a lot of these people are just already close to retirement. And they're just going to say, okay, well, I had a good run. I made enough money. I can go work part-time doing something else, and I'm good enough to live off my own right now. And then remember, guys, part of this deal, whenever it gets done, is like a back pay. So they're probably each going to get like $20,000 of back pay because they weren't given a raise during the last 3 years, right? So there's going to be a large amount of retirements over the next like 3 to 4 years, and nobody's going to be there to fill those gaps. Nobody wants the job, again, because the railroad industries are owned by like, what do you want to call them? Hedge funds, basically. And those hedge funds want to squeeze as much profit out of them as they can, rightfully so, kind of. But that leads to the consequences of people just saying, well, I don't need this job. There's tons of other jobs out there. I'd be perfectly fine. Now, the only people that really can't do that as much are probably the train conductors, because there's not many like other train jobs out there. But for the welders out there, the safety inspectors, there's tons of safety inspection jobs out there right now. There's tons of welding jobs out there right now. There's tons of diesel engine jobs out there right now. So, there's an opportunity for a lot of them, a majority of them, to go find another job or just retire. And that's where the issue is going to be for the long term. But short term, yeah, if they don't, it's rare that they do vote no on a strike, but this is one of those opportunities where there's actually an opportunity for them to do so, just because of how they feel it's a very bad deal. They feel it's a very bad deal. So, but we'll see. There's only a certain amount of people on social media that I know about this railroad issue. So there could just be tons of people that are not on social media that have a totally different opinion. So that's what we're going to be waiting for the next couple of weeks here. Let's see. NA Prince Doge. Yeah, Dogecoin isn't really doing anything right now. Interesting. I mean, you can take a look at it. It's down about 1.2%. Let me get rid of all these lines here. The daily chart. Oops, let me do that. Yeah. We're not really doing anything at all so far today. We still have a few support levels here as far as what you guys might want to be looking at. At this point in time, we're still pretty far above it. we managed to break back above the 20 here, and we're just coming back down, which is kind of unfortunate. We were kind of hoping for maybe an opportunity to have a double bottom where we were kind of like, bottomed out, have that neckline up here around 0.065 level and kind of pop out, and then, just have a really nice time from there. But right now, you're not really seeing any good signs of that. You're going to have to see Bitcoin do a really big move today or tomorrow to cause Dogecoin to start spiking back up. And, people are going to be kind of scared about buying back in over the next few days until Jerome Powell talks, unless they're going to try to cause some massive fake out, which typically does happen actually over the past few cycles or past few months. They've been known to cause a fake pump before a big drop happens on a lot of these asset classes here. All right, but yeah, nothing crazy happening with Dogecoin at this point in time. On the 15-minute chart, we're kind of in this little bit of a channel here. You might have a good opportunity to short it back down if we do break down below this level right here, which is close to 0.06139-ish levels. So, watch out for it, but it's not doing anything too crazy. I'd be more inclined to just see if you could buy around this level of support. But at this point in time, I'm not really going to be doing many swing trades until I hear what's going on with Jerome Powell. I may be doing more day trading. Day trading is probably my favorite thing to do right now during this heightened volatility time. But swing trading, be careful unless you're trying to buy at these big levels of support. So you probably would have wanted to buy right here and not buying right instead of buying right here. Although maybe want to take a short up here, depending on how this works out. I'm looking at it right now, about to have a death cross. We're trying to get pushed down here. Somebody's not happy with Dogecoin. So yeah, it's not really doing anything, but there's opportunities there nonetheless. Yeah, we got 6 months of unemployment when we work is slow, which is like $500 a week. So I guess it makes up for it. I don't know. I mean, yeah, if you guys find a compromise that works for both of you guys, or both the union and the business, that's basically what all these negotiations are. Every negotiation contract is different. And I don't know. I'm not an expert on union negotiations. I don't think I'd want to be. I would just be mad the whole time in the meetings. I'm like, dude, you guys have enough money. You guys have enough money to pay for this. Let me go over here. Over the last hour, nothing is really up at all. Not even more than 0.5%. You got Atom coming down, Luna coming down just a little bit. But I don't really see much stuff happening here, guys. It's pretty interesting. Hey, Uptick Miami. Happy to see you back. And thank you very much for the super chat. Wife and I have a newborn, so haven't been around as much. ADA, can I have your opinion on it, please? Congratulations. Hope the kid is doing all right. And ADA, yeah, let me take a quick peek here at ADA. Let's do a deeper dive over here. Let's go daily. Let's go ADA. Okay, there's a lot going on here. So let me actually remove everything. We can always come back to this a little bit later. All right. So this one was always kind of interesting, uptick, just because, well, actually, let me verify this. The low was 49, so 41.9, 42. So it took a barely held support here. So it's almost like a flat line, but just a little bit different here. So the support level for this is a lot further down than a lot of other coins. What I'd be looking at right now, frankly, is just having this first level for a breakout. So using the high from over here from August 14th, coming back down here to one of the points across September, mid-September, a couple days ago, really. And hoping for a breakout there, leading to a golden cross that somehow brings us above the 200 daily moving average. Not likely to happen, of course, but what I'd basically be looking at is that from just a pattern perspective. If you can actually break out there, you have an opportunity, I would say, to go back up to 55 cents. 55 cents is a good profit if you buy the breakout. That's about an 8 to 9%. I would take that profit. Now, going from more of a technical standpoint here, let's go to the bottom here. You are going to face some levels of resistance. It seems like this level of resistance didn't matter too much, actually. This one mostly did. This one did up here. So you're going to face some resistance, I would say, somewhere around the 0.5146 level. So 51.5 cents, basically. And then from there, if it does break out, I think you would have an opportunity to start scaling out somewhere between 54 cents and where this trend line actually is. So 54 to 55 cents, I think, is a good scale out zone if you want to take this opportunity to buy. Let me see what else is going on right now. We did have a small breakdown right here. If Bitcoin keeps on going down for the rest of the day, you'll probably see this being the pattern of the day, break down, get rejected off of this old trend line here, and start moving more to the side. So the two things I would tell you right now is, if you did want to buy, I would say you're probably going to have a tighter stop loss just with all the bad news that's probably going to be coming along this week with Jerome Powell. And that support level in the short term would probably be about 45.5 cents, a little bit lower than that. Not too bad, but I don't think you need to risk, 88 coming all the way back down here. That'd be a loss. This is a loss of 6% if it goes to the stop loss. If it goes all the way back down to the ultimate support level from like a couple months ago, that's closer to a 17% loss. Not really worth holding at this point in time. Might be fun to take a short, I guess, if we break down below the 45.5 cent level. But again, I'm being very cautious as I approach this. Going over here to the weekly chart. Oh, we don't really have the long-term data that we want from the ADA chart, but that's okay. You can still see that ADA is, let me just get rid of all the lines, you guys, it's easier to see. You can see that we actually already had a death cross here for ADA a while ago. I think ADA can break out above the 20-week moving average. I'm just going to say it's going to be a little bit of a challenge, but going into next week, if we do have a breakout, that'll be the pump we needed to actually start moving back up. And again, now the 200 weekly moving average is actually around the 55 cent level, so you might get it back up there, but I'm still kind of a proponent for scaling at around the 54 to 55 cent level. Maybe if you want to go a little bit more greed in there, you can hope for getting back up here towards, let's just say the 57 mark or 57.5 mark here as far as the 200 weekly moving averages. It has not been a big level of resistance, as you guys can see here. One other thing for you, I don't know how useful this is going to be. We just did one technical, one Fibonacci extension level right here, right? And you can see it worked a little bit right there with that, what is that? The 0.5 level, I guess it is. Another one you might want to use is the one from all the way back over here to this high, to the low. And you might be looking to scale out somewhere up here around 56 cents. If it starts to boom up a little bit higher above the 53 cent level, you could always add that to your calculation. So maybe instead of scaling out at 55 cents, like I'm talking about, you maybe want to move up to 56 and a half if you want to take the extra load off right there, moving into like, some resistance around here around 59, 60 cents. But Bitcoin's going to have to move up a lot itself, and if that's the case. And one other thing here, add that trend line onto your charts and add this trend line onto your charts. I think these are going to be very, very important over the next few days. If we start breaking down here, I do think we'll kind of come all the way back down to 44 cents or so, which isn't a massive drop, but it is a drop none the same. There we go. Okay. Meanwhile, Bitcoin's looking ugly as can be over here. And hey, Ken, happy to see you back, my man. And what's right here? Hey, Tony, yeah, if you guys can, please make sure to always like the stream. I appreciate it a lot. Loki's oh, he's not even in here. He's in my bedroom looking out the window because he wants to go play with the neighbor's dog. That's all he's doing right now, whimpering. But we'll go play in like 25 minutes or so. All right, but if you guys have any questions, let me know. I know this is gonna be a shorter stream day here, but I want to answer any of you guys' questions. Oh, and thanks, Uptick Miami. I appreciate it a lot, my man. One other thing here for members, I think I'm gonna start making this a weekly thing. I'm just gonna figure out the best time for it. But I'm thinking for you guys out there like Can and Alex and Square Bagels, I'm thinking of doing a Sunday members only stream. So you guys know I go over a specific amount of stocks every now and again on the members channel, mostly plays that I like. But I want to see if I do a 2-hour stream where I'm just kind of working, because I don't know how many of you guys would actually show up to a members only stream. If you guys have any questions about a stock, we could do a deep dive play by play, because you guys know, I like Nvidia, Apple, Tesla, Microsoft, some of the basics that my bread and butter plays. But some of you guys might like another stock. That will be the opportunity for you to ask me any questions about that stock from a technical standpoint going on into the week. That way you guys have a game plan before the week starts, and you guys aren't maybe just trading the same stocks that I do, because maybe some of you guys don't like trading Apple or don't like trading Microsoft or Nvidia or Tesla, whatever. Maybe you guys want to trade FTNT, SoFi, CVS, whatever it may be. I'm going to be having that for the members as well. So I hope to see you guys there. And probably so that'll be something cool as well. All right, there we go. All right, but does anybody else have any more questions or anything like that? I don't really have much more to talk about. It's a pretty simple stream here today, guys. We're waiting for the death cross, and we're waiting to see what happens to Jerome Powell and the rate hikes. I'll probably try to go live with the rate hike increase if I have time this week, and I think I should be able to have able to have time with that. And hey, Alex. Okay, thanks. About what time will you be going live Sunday? I haven't determined that yet. It'll probably be sometime around noon for me, so like 3 p.m. East Coast, 12 p.m. Pacific Coast. That might be okay. And hey, Lalo, what's my favorite number one indicator? I mean, personally, I would say moving averages. They always tell me a lot. That sound cheesy, but I guess it would just be, if it's not like with the moving averages, probably just the RSI. Probably just the RSI. I like to know when things are overbought, oversold. But like, honestly, guys, for the way I trade, if I can find a pattern and I have moving averages and I have back tested history on how it normally performs, I can usually make a trade off of those three things without having RSIs, without having algorithms, without having option flow data, without having a lot of other stuff. Just because, you know, it's my bread and butter place. I've been doing these for a few years now, right? But I would say RSI is probably something I enjoy quite a bit. But personally, I wish that there was like an automatic system out there that was free for everybody that just found patterns, and large patterns, like on a daily chart, a weekly chart, something like that. Because right now, if you guys go out and you guys are looking at any particular stock out there, like let me just find a regular stock that we don't talk about too much. Google. We don't talk about Google too much. Google's something I want to buy a lot of over the next few years. And you can see we just broke new yearly lows. Look at that. Broke down right here. Now we managed to close above it, but we still broke down below the 101 level here. And now we're thinking about probably going a little bit lower. So, you know, at this point in time, you see how clustered that is? It's just a straight up sideways trading cycle where you're selling up here. Oops. Selling up here and buying down here. The interesting thing, which makes this so much more annoying about this bear market here, is that it's not as clean as it once was. A lot of times when you're in a bull market, everything is crisp and clean from a chart perspective. Maybe some of you guys have had the feeling before, like, hey, we stopped here, so we should stop exactly there and not break out. We should stop exactly here and not break out here. But we've been having a lot of fake outs of breakouts, leading to a lot of confused traders out there, which has been really, really annoying, you know, because technically, if you wanted to do this breakout type of thing, you might buy right here, hold a few days, maybe make 10 to 20% on your options. But as soon as it starts coming back down and you don't sell, you know, it becomes a much more of a hassle. And I don't even know if things like the Fibonacci extension levels would actually help you in these scenarios. Like, nope, wouldn't have helped you there. I guess you'd be using this level, right? I guess it does help you there, but just because that's the ultimate low we have in this cycle. It does, but not everybody can be really picky like that. So, you know, trading is becoming much more difficult, and it's going to get much more difficult over the next few months as we kind of figure out this next cycle here. But I would say you guys are going to have an easy opportunity to make money after the markets take their next big drop, whenever they take that next big drop. But right now, you know, there's a reason I don't talk about Google, because it's so freaking ugly. I mean, guys, like we broke down right here, and sure, we came down a little bit. But there are some stocks out there, some charts that just do not look good at all. And that's one of the reasons Google is literally on the bottom of my list right now. Other stuff like here is Visa. It's choppy, but at least there's some order to it. As you guys can see, there's like a basic trend line here, a basic level of support down here, where Visa can come back down to 182 or something over the next few days or next few weeks, excuse me. You got Nvidia coming down in a general downward channel. Doesn't look too bad, although Nvidia is going to crumble on Monday, just absolutely crumble. You know, MU found some basic levels of support, but there's a, you know, downward channel, broke out above that. Awesome flag breakout. You got to be very, very picky. Excuse me, guys. You got to be very, very picky about what you guys are choosing in this current market environment. Let's just go to an hour chart. This, yeah, there we go. We're trying to hold the 20 moving average here. See, and here Mars game. Gaming, excuse me, Loki's over here. You like the poly Ethereum combo for the good money in the next few months? There you go. Whatever you guys work out for yourselves, stick with it, and just make sure you guys change your you guys manage it appropriately, right? And hey, Ken, do I have a tutorial on RSI? No, I don't think I do, but I think you can find one on YouTube. I can make one though. I'm planning on making a bunch of tutorials, finishing off this month and next month. Basically, I'm making them, but I'm putting them in my channel in such a way where they're scheduled to go live. So I'm not making them one day and then posting them the next. I'm making them, putting them all on YouTube, and then like, hey, this one's going to be scheduled for this day. This one's going to be scheduled for this day. That way I don't have to worry about it as much next month, because I think that pretty soon we're going to be heading for an increased level of volatility in the markets, like another crash or a big boom. We'll have to see. But I plan on going live a lot during that period, because there's going to be more eyeballs on YouTube, and I'm going to need to get my views back up, because as soon as I had COVID, YouTube just killed my views out there and stopped recommending my stream to people, which is fine. I got COVID, but I kind of want those viewers back, right? When does Powell speak? I think it's, I don't know the exact date. Let me see if I can find it here for you. Oh, I spelled his name really bad. Let's see. Where that commercial? Wednesday, 2:30 Eastern time, which means what is it? 11:30 Eastern time, specific time, excuse me. And it says most people think we're going to have a 75 basis point basis hike, but some feel that we may get up to a full 100. I'm rooting for 100, but again, I don't think Jerome Powell has the cojones to do something that bold. But we'll have to see. He may surprise all of us there. And if he surprises the markets, oh my gosh, we're going to be crumbling down. Actually, that may be the catalyst we need for the NASDAQ to come into contact with that 200 weekly moving average, giving us a solid bounce going on until October if we're lucky. And I'd be happy to see something like that occur. I don't know about you guys, but since we always bounce, that'd be great. Now, if we break down and we don't hold, that would kind of scare me. But we have to break down from a weekly chart, not a daily chart. We've broken down below a daily chart, I think, a few times. We have to break down on the weekly chart, not the daily chart, if you're looking at the 200 weekly moving average as far as the NASDAQ is concerned. Me too. I was thinking that the other day, if there was an indicator that just drew trend lines, wedges, triangles for you. I mean, so you can only do this, I guess, if you have two monitors. But what I would tell you guys, if you have two monitors, or if you guys have a laptop and a desktop, or a laptop and an iPad's usually pretty good. What you would want to do is just have like a chart, like how I have it set up. Maybe you guys have 2 charts on it, or 4 charts, whatever it may be. And then on the other screen, you have one of those patterns diagrams that I gave you guys. You guys can use another one. There's tons of free ones online. But image. That's just the one. Is this one? No, that's not one. Looking at all the images I have here. No. Here, hold on a second. Browse. There we go. Let me change this to fit to screen. There you go. My head's going to be blocking a couple of them, but you're going to have something like this rolling on, just kind of chilling on your screen. That way you guys can easily just analyze what's going on, because the majority of the time, guys, you guys are going to be trading continuation patterns, like the top 4 in the top left-hand corners, those 4, that quadrant right there. Going to be looking at those. You guys will see a head and shoulders every now and again, unless you guys, mostly you guys will see cup and handles where you guys are day trading, not so much of swing trading. You may see a lot of wedges here, especially if we have a larger crash over the next few days. You guys normally will see flags and pennants. I usually think of pennants as these ones in the top left-hand corners. I usually see the pennants right here there in the middle as like the day trading version of those. And then, of course, you guys are pretty familiar with the double bottoms, triple bottoms, double tops, triple tops. Rectangles, on the other hand, can be a little bit more tricky. And rectangles are just kind of annoying, which is why I don't like them as much, because in this current bear market, they kind of fake you out a little bit more. And where you would normally buy, you're not really going to be buying there, because they just, by the time it happens, it feels like the market is oversold or overbought. Oops, what was that? No, which one is it? There you go. It feels like it's overbought or oversold just because of the volatility of the bear market. We had a good amount of volatility in the bull market, but when everything is going up, the cooldowns are pretty nice, and then we kind of relax. A good example of this, I know we already had the split here, so it's going to make it a little bit more difficult for me to show you guys what is going on here. But we traded this breakout here last year, okay? Your basic pennant, your basic continuation pattern. You move up, you cool off, then you keep on going up, and you're a very, very happy camper. However, you know, from this run up here, Apple ran up 41%. That cooldown level was about 20%. It dropped a lot. And so after that, we had a little bit of a spike and we were good to go. Now you can see the same type of thing happening, but a lot more choppy along the way when we have these kind of weird drops. So this one was all the way over here at 26%, popped back up 15%. Then we came down another whopping 15% before ultimately spiking back up here. And this whole thing was a lie. Everybody thought inflation had peaked and that the Jerome Powell was going to start going to 25 basis points. Like a really ludicrous thinking if you think about it, but the market still believed it. So of course, everything really started to pump up here. So what you guys are going to be doing for your safety is most likely just trading breakouts here and seeing if they work. But you guys are going to be much more cautious than normal. You know, this is a good breakout to trade primarily because we have the golden cross. You can see the golden cross is coming and you know it's going to happen. So you could open up a position right here and be like, okay, at least hold for a week or two and see what happens. But, you know, the first day of the breakout, you buy right there. Second day, your options are up maybe 5-10%. Next day, your options are down 5-10%, up 5-10%, up, you know, 15-20, maybe up 15, maybe up 20-25. Then it comes all the way back down. It's just madness. Whereas last time after the breakout, after you had your 3 fun days of like, you know, scared time right here. I was scared. Well, not scared, but I was annoyed that it wasn't going up. What happened? Boom, 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 continuously just going up like crazy. You're not going to have that smoothness, which is why it's so much more difficult for me to give you guys calls as far as the members are concerned. If you guys members took my trades a couple weeks ago, they were down for like a few days before they started printing out money. I think I just had the picture here a few seconds ago. When I gave you guys or the members these calls here, can test this, and some of you guys can test this. Oops, I messed up something here. Hold on, there you go. What the heck? There we go. Oh, forget it. I'm not going to move the picture. I'll just leave it as it is. But you guys can see up 1,000%, up 200%, up 200%, up 40%. They were down in the red for a few days before they start printing out money. And that's where a lot of the hardship comes as far as trading this bearish market, which is why I don't like it as much. You got to be much more picky, much more, choosy. But some of you guys are making good profits. So that, you know, whatever's working for you guys, keep it up. Keep at it. Excuse me. Let me go over here, hit done. See. And hey, Lalo, thank you very much for the super chat again, my man. How long after Powell speaks until you open up a trade? Probably after 5 o'clock. So after the trading day closes for crypto. So like after the candle resets on the daily chart. Or if you're talking about stocks, it's probably going to be a half an hour before the end of the trading day. Half an hour before the end of the trading day. Because he'll start talking at... the information will probably come out around 11:30 my time. He'll probably start talking somewhere around 11:45 to 12 my time. Then we have like an hour left of the market basically. And so there's not going to be really much time after that. But I usually like making trades towards the end of the day here. But if I'm just going to put some money out there right now, I'd probably just say wait for Monday or Tuesday. We might have a little bit of an artificial pump before that day occurs. Excuse me. And then I might place a put on Tuesday if I'm going to try to get ahead of it. And I'm going to find a cheap put that I can, whatever stock I can, that's probably around 25 to 50 cents. Wait for the market to drop after the news. Hopefully it drops after the news. Hopefully it goes to 75 or 100 basis points. After that drop though, that's the day or the day after that drop, I'm just going to be selling it and just taking that little bit of money and run into the bank. It'll be a large, it probably won't be a massive trade just because the volatility levels are going to be crazy. You're going to be going off of volatility and news and not necessarily off of technicals. But yeah, normally when I place these trades, they're usually towards the end of the day, because at the end of the day, you have a higher opportunity to see, hey, there's a good chance that we're going to close above this breakout line. So the breakout is going to be confirmed. So I can buy right now. When you kind of buy in the morning, you could be above the trend line in the morning, and by the end of the day, you'll get rejected by it. And so it just looks like a wick that attempted and it failed. And then you're holding the option for like another 3 days, watching it go all the way back down. I don't like to do that too much, which is why I prefer to trade towards the end of the day. As far as options are concerned, crypto you can trade whenever, but usually if you're going to be trading crypto, you're going to be holding on real fast, because that volatility with Bitcoin or any of these other assets is just going to go wild here. Let's see. And here, long-term lunacy. It's the same as gambling here. If you're going to be betting on that type of stuff, the Luna founder Do Kwon, he has an arrest warrant out for him. I don't think they're probably going to get him anytime soon, because I think he lives in Singapore right now. He's out there. But the fact that he broke some laws is going to draw a lot of eyes towards him. And I think it's going to be hard for a lot of his companies to do business in America, with the SEC probably looking at everything that guy touches. It's not going to be a good look. And you're probably going to see Congress over the next few months use him as some type of tool to say why we need more regulations, why this can't be acceptable. And I think you're probably going to see a lot of people actually in support of that, because of how bad he screwed everything up. It's like the same as casino money. If you want to place money on it, you place money on it, but you don't keep adding to it. It's not something I would dollar cost average. It's something I'd put $20 into, maybe $50 into, and just see what happens with it over time. But again, if you guys go over here to Luna C, there you go. Remember, it is already at a $2 billion market cap. So while it can go up a lot, there are a lot more coins that I feel like are going to give you better returns in the long run. With more potential, just because they have a much lower market cap. But yeah, it's a longer term hold. It's a very risky play, more of a have fun play than serious investment style of play. But I mean, there's opportunities to make money if you just want to leave some money in there and see what happens. Just be careful though, if the market really does start tanking pretty hard, you could see whatever that money you drop in there go to a quarter of what the value or half the value, just because it's so overbought right now. It's very overbought. And Ace Go Bagels, you have a good day, my man. Would you read into the bullish divergence on SPY smaller time frames, like 1 hour? Pretty clear cut bullish divergence. Looking to add into more puts after the next pump. Like 1 hour, okay. Okay, let's find a SPY for you right here. Watch list. Probably talking about bullish divergence as far as the RSI is concerned, or maybe the MACD is concerned. I don't know which one you're probably talking about here. Oh, NACD. No, we want MACD. Oh, I'm just pushing the wrong one. Okay, good. I hope I was pushing the wrong one. There we go. There we go. It actually should be interesting here pretty soon, because again, just like a few other things we were talking about a few minutes ago, there is a good opportunity for us to have a pump over the next few days. And I would say that pump is going to be an opportunity for you to open up some puts if you want to take them. So of course, depending on what you guys are going to be using right there, watch to see what happens when this MACD eventually flips back around. On the hourly chart, that could happen probably either Monday or Tuesday, to be honest. So, right before Federal Reserve Jerome Powell talks. Let me see right here, because we never managed to break out above this one right here. In fact, we really just started to tilt back off, but by then, let me see, is there anything actually here I could use? Most people wouldn't be using this one right here. What day was that? Yeah, by then it was too late, September 13th. I mean, when he broke down, it did signal another move coming down here, so I guess it was right, although you had to deal with some pain before that happened. I would say if I go over here, hold on, let me get rid of this stuff. 4-hour chart here. Okay. Just had a death cross there as well. That golden cross didn't do anything though by then. I would say maybe if like, you know, the SPY can get back up to like 390 or so over the next few days, that'd be a really good opportunity to start buying some puts as it tries to curl back down here. But I think it might even try to, you might see what happens on the 4-hour chart as far as this 20 moving average here. 50 we're not coming in close into contact with. This death cross here was really a nasty move, unfortunately, for the SPY here. And of course, we already broke down. Right, I guess it was a choppy. Oh, this is a 4-hour chart breakdown. Does that make a difference if I do that? Okay, yeah, we managed to hold. So yeah, so you are seeing a breakdown here, which isn't ultimately too good, and almost a shoulder, a head, and a shoulder right here, just kind of what we talked about the Nasdaq. So yeah, I think you're going to have an opportunity to open up some puts, and probably people even open up some puts on the breakdown right here of this head and shoulder. So shoulder, head, shoulder. And then that neckline you can kind of see going all the way across that line right there. So I would say, yeah, there's an opportunity to open up some puts, but hopefully it gives you one or 2 days of pops to see if it can pop up before doing that. Yeah, no worries, I've got an edge. I got pretty lucky last year with the Kinsole, turned my 1400 stimulus check into 7,000. This trade I'm hoping to make a Polygon will hopefully be something similar. Yeah, dude, best of luck, Mars Gaming. There's a lot of opportunities to make money. Just make sure you don't put all of your coins in one basket, so to speak. But I think everybody should be diversified. But if you're working well on it, or you probably actually already do have a diversified portfolio, but as long as it's working for you, keep at it. Anything on XRP since MasterCard just signed an agreement? Nothing really crazy. I think XRP is something golden for the long term, really, really golden for the long term. But in the short term here, it's just not having any effect just because everybody's so worried about everything else going on, right? So here's the daily chart for XRP. Nothing's really been happening. You had a small little pump up here a couple days ago, you know, jumping up around 19%. That might have been the thing you were looking for right there, but it's already had a few of those over the last few cycles. So I think it just might be breaking above moving averages more than it was the news. But I didn't really read too much in the news, so we'll have to see how that works out. Interestingly enough, though, we did break out, and we may retest this support level down here. But if you're going off of Fibonacci extensions, which is always fun, right? Oh, is this the right one to be using? Yeah, it is, but it's not working as well as I want it to be, so I probably won't use it. It actually worked right there. It may have worked right there. Let me see. Nope, not working as well. Probably just the breakout. It may have an opportunity to get back up here towards 38 cents or so, but besides a little bit of a pop that's been kind of having for a while, and not too much. Like if Bitcoin falls, this is going to crash. Or if Bitcoin crashes, this is going to crash. If Ethereum crashes, this is going to crash. But I think long term, this is going to be something I really want to enjoy holding. And if I look at the monthly chart here, who knows how long it's going to take for us to get a bottom here. But let's just say the bottom is like another 40% down. Who knows? Again, this is a big O what if. But let's say it's like a, you know, we'll come back down to the lows over here, like another 50% down. Next bull run, it may get as far as like $3 or so, which could be really crazy. If things get really, really hot next time around, which I doubt it, you may even see something up here towards 20, but that seems so unlikely to me. What I would probably say is if you go over here, and you might see something between $3.30 all the way up here to $5, if you're really lucky, $7. And that'd be a really crazy move for this type of thing. But by then I would assume all the bad news about the court proceedings, the lawsuits, all of that stuff is behind them and money can kind of flow into this, hopefully. But, you know, last bull run, it did have a pretty nice move. From the lows of COVID, it ran up like 2,000%. This time around, let's just say from here where it is now, you know, that's like 766%. I think that's doable here. Hard, but I do think that's doable in this next cycle here. So I would assume good long-term run, but nothing really crazy happening over the last few days besides that small pump, probably after the news you just said. Okay, but okay, everybody, I'm gonna end the stream right here. I gotta go back to the block party. Loki, I told Loki, like I even talking to a dog, but I told him I was gonna take him outside so he could play with his friend Chomp, who's a baby husky. He's been pouting at the window. Like you've only seen him here like once. It's because he's looking out the window, like dreaming of playing with his friend outside. Okay, so I will see you guys, members. I'll see you guys tomorrow, and everybody else will see you guys Monday. Tomorrow for the membership stream, it's going to be around noon my time, and it's going to be like let's see how it rolls. I'll probably just be doing work because, you know, with members, I guess you'd say, there's less people watching the stream. So I'll promote it on the main, like I'll promote it and everything, but I want you guys to like just keep an eye out for notifications if you guys are members. Otherwise, I'll just be doing my normal work, pre-week work, and I'll see you guys on Monday. Okay. All right, everybody. Have a good rest of your